Hello everyone, welcome back to the HODL Indicator. In this video, we are going to analyze Bitcoin. Since Bitcoin is the key asset in this market, analyzing it is crucial for understanding both short-term and long-term trends. Now, if we go to the weekly time frame, we can see that Bitcoin right now is testing this support line here. And if this level breaks, the next major support sits at $100,000. And if we lose that support, we are going to go to this area. This area, in my opinion, is like the last level Bitcoin needs to hold before permanently entering the bear market. Now, if Bitcoin loses this area, the next high would be a lower high instead of a higher high. So the cycle top would be in. It would be in August instead of November or December. Now, you might say, well, Bitcoin had 50% corrections at the end of the cycle in the past, and it still made a higher high, right? Correct, but that cycle had more strength than this one. If we draw this line here, we can see that the previous cycle started weak and then got stronger over time. But in this cycle, the momentum has remained consistent when we measure the lows. And if any cycle has more weakness compared to its strength, then we're going to have a bear market. And this will be the first time the cycle ends in August, if this happens. Now, if it doesn't happen and Bitcoin holds this area, we could see Bitcoin go as high as this area and potentially fake out above this area if Bitcoin shows strength. Now, what this area is just these two previous cycle tops connected to the current tops we have now. Now, some might suggest that this cycle could extend beyond December, but I highly doubt it because if we zoom out, we can see that the trend is losing momentum over time. For example, if we draw this line here, then you can really see the change in the momentum. Another way to see it is by looking at the return of each small wave, like this. So if you look at the small waves, you can see that from this bottom to this top is 103%, and if we measure this bottom to this top, it's 198%. This bottom to this top is 125%, and this bottom to this top is 68%. So we can see that except the first one, the second, third, and the fourth one had diminishing returns, meaning that this had 200% return, this one had 125, and this one had a 68% return. So it means that the trend is getting weaker and we are soon going to have a bear market. Now, another reason why I see the cycle ending in November to December is because of the length of the previous cycles. Now, if we zoom out and ignore the first cycle, we can see that both the second and the third cycle lasted 1,060 days before finally entering the bear market. And if the third one's going to end in the same way, this cycle is going to end in late October to early November. Possibly in August if we don't hold the support area in the weekly time frame. And by the end of the cycle, I mean that the top would be in, but Bitcoin can still make lower highs, but not a higher high. But one thing you will notice is that September is always a red month for Bitcoin when it's the last year of the cycle. Now, if we look at Bitcoin's monthly time frame, we can see that every September in the final year of the cycle has been red. So for example, here we haven't gotten there yet, but September 2021 red. So let me mark it. Okay, red. September 2017 red here. September 2013 also red. So every September has been red by a little, but it's red. So I believe that this September will also be red. Now, after the top is in, the drop gets less intense over time. So as we can see, the first cycle was 86%, second cycle was 84%, third cycle was 78%, and the fourth cycle is the cycle we are in. It would be around, if the top is, let's say, 130,000, it would be around 73 to 77%. If it goes lower than that, however, I have a theory that it's going to play out like the S&P did in 1968, I think. So if we look at the S&P 500, we can see that in the year 1968, after making a new high, after making the cycle high, we went down to break the previous cycle low, and then going above the fourth cycle high, making new high, and then going below the previous cycle low. So why would this happen? Why do I say that this is a possibility? Well, first, because of the diminishing returns that the S&P 500 has, and second, because this low is also the second cycle high. So the third cycle low is also at the same area as the second cycle high. So if we go to Bitcoin, we can see the same thing. So 4 cycles, diminishing return, and then the third cycle low is also the second cycle high. So I think if Bitcoin makes the top here, goes below this area, this green area here, holds it as a resistance, continues going lower, breaking this cycle low, then we would have this pattern play out, where it goes higher than the fourth cycle high, and then lower than the fourth cycle low. Also, there is another analysis on TradingView that we did, where my colleague explains that if we hold this area, we could go as high as 150,000. But personally, I do not think 150,000 is possible. The highest price we're going to see is around 130 to 140,000. Those were my thoughts on Bitcoin. If you found it helpful, like, subscribe, and ring that bell so you never miss an update. Also, let us know what you'd like us to cover next in the comments down below. All of our socials are linked down there as well. That's it for today's video. Thanks for watching.